India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. It's the beginning of a new week, and this is, in some ways, the biggest week of November, and of course, in some ways, the biggest week this quarter as well. Lots of big, huge events lined up, which have market implications. We will discuss all of them as we go along. I'm Prashant. With me, my colleague Surabhi and Nigel. Guys, hi, good morning.
Hi, good morning, folks. I guess the big Diwali week is finally behind us, so I think most of us are coming back post the festivities, and I think the market wants to also take fresh guard because of the kind of cues that we have lined up with the election in the US, the FOMC meeting, and this final big meeting in China that everyone's talking about. So there's just so much going on, isn't there?
Well, as Prashant has been saying, it's going to be a November to remember. It's going to be a big one coming up for the globe, for equity markets as well. So let's get straight to the action.
Absolutely. Before we get to the action, by the way, someone was telling me that you should weigh yourself post after Diwali season and before Diwali season.
No, no.
Before, but I did after. And I think I've gained a few kilos.
Those are numbers we do not look at, so we avoid them.
Absolutely. Well, let's just quickly begin with, of course, the dateline. I think that is essentially something we've got to you. It's not new, but just to, in a way, put it out again. US elections are tomorrow, which is the 5th of November. You've got the China NPC, National People's Congress, which starts today, runs till the 8th, which overlaps the election result in the US. And then on the 7th of November, which is Thursday, you get the Fed decision. So this is essentially, the week which is in front of us. Now, let's just turn the clock back and take you to Friday when you got the jobs report. Absolutely remarkable. So you basically had US jobs numbers, which were much lower than expected, but the markets were unfazed. Now, the actual number, 12,000 jobs added in the month of October, as compared to about 100,000, which was expected. The impact, of course, coming through from strikes and hurricanes. Now, the thing is, on Friday evening, that was the Muhurat session when the numbers came, I was saying that markets should remain unfazed, absolutely. That we should not see too much of a reaction because it's strikes and hurricanes, and this was kind of well advertised. But the actual reaction was even more extreme. You had equities which reversed the slight temporary sell-off that we saw. S&P was up 0.4 by close. NASDAQ was up 0.8%. And this is the rates market. If you look at US Treasuries, they corrected the knee-jerk rally that they saw. Yields had fallen sharply, and by close, the 10-year was up 10 basis points. You got a very weak jobs report, which essentially means the normal reaction function would be that the Fed's behind the curve, they need to cut more, yields should fall sharply. Yields ended 10 basis points higher. Now, that is something you don't see very often. By the way, the 10-year real yield has ended about 2%. Historically, if you go back last 4-5 years, 2% is kind of the danger mark, but I think we're in a slightly more different environment, so I won't sort of fixate on that just yet. The dollar index ended about 0.3%, 104.28 is where we left off on the dollar index. Consensus still expects, after the jobs data and everything, still expects a 25 basis point rate cut on Thursday. That is the 7th of November. The US election, and we'll get the results. Hopefully, we'll get the results when they're supposed to come, which is tomorrow night. For us, it will be Wednesday early morning. So Wednesday morning around the same time, I think we should be able to by this time, about half an hour from here, from about 8:30 in the morning, 9 o'clock in the morning, we should know who is the next US president. If, of course, things are not murky as they were in 2020 and 2016, and it's not very, very close. But it remains a binary risk for markets. Betting market averages, which were favoring Trump, have also kind of converged to what polls are showing, and the polls are showing that both Trump and Harris are in a kind of a dead heat. Okay, there's just one more thing I want to point out. Last week, there was, and I think it was kind of missed, or not too much attention paid to it. There was a Reuters article which said that the much-awaited fiscal stimulus plan will be announced during the NPC. That is not the sort of story. They put out a number. The article floated a package worth about $1.4 trillion with promise of more if Trump wins the election. And I think this is the one which we need to watch out for as well. And this will all play out in the next couple of days or so. Just to circle back and closing the levels here, resistance for the Nifty. We ended higher in the Muhurat session, but of course it's a 1 hour low volume day. Resistance at 24,372, which is the Thursday high, and then 24,498. These are the two levels to watch on the upside. Supports come in at 24,073. You got for the Nifty Bank, which did not break the low of 50,194. It posted a positive weekly close. Resistance at 52,330 and then 52,835. And support zone is between 53.82 and 50,194. I think if you're trading day to day, and especially the indices, I think it's just better to wait a day, 2 days, and then take a call. By Wednesday morning, I think the picture will be much clearer. And I'm sure you'll get an opportunity to do what you want to do because expect at least the indices, broader global indices, the big ones, to be volatile going into the US election. Surbhi.
Absolutely. What a big week lined up, right? So you need to pad up, get the coffee or tea or whatever's your fix, get that ready to get through it. Before I start talking about Asian equities and how they're doing, just a word on oil as well, because what we were discussing last week has actually transpired. OPEC Plus was to increase its output in December. They were talking about an output increase of about 180,000 barrels. But now that's been pushed back by a month, and that's why there's a bit of a bidding on the upside on oil prices as well. So once again, Brent is moving closer to the 75 zone. So just keep that in mind. Now back to equities in Asia. Actually, to start off with, the color is green, considering the huge week that we have ahead of us. Most of the markets are up and about. Japan, by the way, is closed today. So just keep that in mind. That's why, that's a cue that's not available. But a lot of the other markets that are trading are actually fairly positive. We also have the rate decision from Australia this week. Tomorrow they're coming out with the rate decision. No changes expected in Australia. Now on China, considering that's the big event here in our neighborhood in Asia, the 5-day NPC meeting, which is the National People's Congress of China, which is their parliament, that meeting will get over on Friday. It's a 5-day event that's going on. And all kinds of bets are doing the rounds in terms of the size and the extent of the stimulus. Nomura, for one, feels that the extent of the stimulus could be up to 20% higher if Trump gets to the White House instead of Harris. So a lot is perhaps hinging on the way tariffs will play out. In fact, under Trump, going by a lot of the announcements that we've heard and the claims we've heard that tariffs could go up, that's, imports coming into the US from China, tariffs could be up anywhere between 60% to 200%. So therefore, they're expecting a bigger stimulus in China if Trump does get the White House. By the way, in the last 1 month, there's been a lot of underperformance in the Chinese market. The mainland Chinese index, the Shanghai Composite, is down 6%. Hang Seng is down almost 10%. But, and now this brings me to India, this has not led to a stoppage of the FPI exodus that we've seen in the same period. In fact, if you forget the Muhurat session for a second and just, I'm rewinding back to the Thursday session before getting into the Diwali weekend, we had a lot of selling that day as well. I mean, FI has sold once again in the cash market, almost 5,800 crores. Domestic institutions offset about less than, half of it. And on the Muhurat session, for what it's worth, I mean, the session closed positive, but the FPI selling continued even there. Small number, I mean, 200 crores was the selling on the Muhurat day. So keep that in mind because the FPI numbers are nowhere supportive. The level that Prashant also mentioned, even I'm watching for that quite carefully. This is 20,073 because that's the low. If you talk about the consolidation that the market has been, we've not breached this level, and this is going to be extremely crucial to watch this week as well. Now, just a couple of areas that are going to be in focus. OMCs, not only because of the move in oil, but because we've got a hike on both ATF and commercial LPG. So let's see how our stocks react. It's about a 3.5% increase in ATF prices. I went by the Delhi rates that have been announced. If you look at the other pocket of the market that I'll watch out for today, that's going to be autos for sure. What is the month of October telling us? That the struggle on the passenger vehicle side continues. That's real. Numbers have been weak. Hyundai, just 2% growth. Maruti, domestic sales down 2.3%. Tata Motors, passenger vehicles, absolutely flat. The only exception is Mahindra & Mahindra with that 20% gain. On the two-wheeler side, things are much better. Eicher, for instance, Royal Enfield sales are up 30%. TVS sales are up 14-15%. Hero's done well, 18% higher. We'll be speaking to the management of Bajaj Auto as well. So again, the complete disconnect between two-wheelers and four-wheelers, that's very much on. Then, of course, we'll talk about tractors. M&M has done really well on tractors as well, by the way. So watch out for that stock today. Lots of interesting results. I'll leave you with the list for the day. ABB, Amara Raja, Bata, some of the railway names like IRCTC, and IRFC as well, Raymond Exide. So it's a pretty interesting session for a lot of these large mid-caps that are reporting numbers today, Nigel.
Well, that's right. And October went to the bears. The question is, can the bulls fight back? And if you look at it, the last week or so, actually the broader markets have suddenly started doing quite well. So most market men, most rational voices that we've heard, they've said that the large caps could outperform. But at least in the past week, the pullback has been far in, the mid-caps, the small cap, as well as the micro-cap, in comparison to what the Nifty has done. That's telling you the animal spirits are back. There is a fair bit of participation as well in the broader markets. And that sharp dip that we got, it seems to have got bought into. In the near term, though, you expect the headline index to be fairly volatile. What about the FIs? Well, they're diametrically oppositely, placed in comparison to what it was in the previous series. So at the start of the October series, they were net long, and we know what happened, right? They didn't get it right. The clients, on the other hand, they were net short. Now, this time around, at the start of the November series, well, the clients are net long and the FIs are net short. I'll tell you what, this sort of a combination is not such a bad thing. In percentage terms as well, if you pull it up, the FIs, well, 23% of their positions are on the long side, while you have 77% on the short side. Two strikes were a bit active, the last couple of days, the 24,400 call, 24,300 put. And you just plug in some numbers, you look at the recent levels that you're looking at, and in the last week or so, almost every day we went to around the 24,500 odd mark. And the highs come up for you on the screen, almost on a day-to-day basis, 24,440 to around that 24,500 odd. And that's where the resistance zone comes in at. So 24,500, 24,550, that's the near-term resistance. You get support that comes in at around the 24,000 mark. That's from where we recently bounced up. And otherwise, if you're looking at a sharper correction, then maybe, in fact, the 200 DMA comes into play. But for the time being, at least, it appears the bulls want to defend this 24,000 odd mark. Stocks that I'm looking at, well, Welspun per Corp, they just came out with an order win just a few minutes back. So they received a large order of around 1,300 crores odd. This is the second big order that they have received in the last 35 to around 40 days or so. And the US business has been struggling. This entire order gets executed in FY26. So that's the stock that I'll keep on my radar as well.
Okay, all right, got that, Nigel. So lots to watch out for individual stocks and, of course, market levels. Let's get started then with the equity call of the morning. Chetan Sheth of Nomura says that the coming week is possibly the most pivotal one for Asia ex-Japan stocks, with two major events on the calendar, US election and China's NPC meeting, which may have significant implications to the multi-month outlook for Asia ex-Japan stocks. He says Donald Trump is likely net negative for Asia ex-Japan, while Kamala Harris is net positive. That's Nomura. Remember, I was telling you that they're saying that the extent of the Chinese stimulus could be 20% higher if Trump gets to the White House.
Some Teflon coating, just in case, right?